Monday, August 14th, 2:03 p.m. New York time. This is a review for the swing trade I shared last night, and I closed it this morning. It was on options on the S&P 500 futures. Right now, we're looking at a daily chart. The current candle is green. Again, higher high, higher low from Friday. Big wicks on the bottom. Prior video, I laid out the trade idea, the setup. Here we are looking at the 4-hour on the ES. Trade idea was this 4-hour candle that closed Friday. It was an inside candle, looking for the trade on the breakout, which came when the market opened Sunday night for the futures. And it was using options for the trade, outright buying options, not credit spreads, not debit spreads, but just directional. And the contracts were ones that expired the same day. They expired today. Had a defined trading range. The upside, 4,500. The next one, 4,525. And to the downside, 4,450. And below that, 44.25. Those price levels were going to also help me determine strikes to select. So this, again, focus on this one. This yellow candle here, going into the 1-hour chart. It's right here. Yellow horizontal line is the top of it, and the yellow horizontal line down here is the bottom of it. Sunday night opened, and this 1-hour candle broke above it, closed above it. I like that. I took the trade, went bullish. Well, call options here, the yellow arrows facing up. And the strike I selected was the 4,500 within reason to get up there. Not some wild and crazy number, had a lower probability. Nope. As you can see in hindsight now, it went there. It's hovering just around there now. So that was my first trade I placed right there. You're going to see it in a faster time frame in a minute. Take it down to the 15 minutes. So here we go on the 15 minutes. Once I got in, it went up for a little bit, had some gains. Wasn't looking to close there. I was looking to see the trade going higher up here between last evening and today. As soon as I got in the position, I placed a working order to close the profits. In hindsight, I had it too high. So I had it too high, but I adjusted it a few times to reduce my profit target. Then later in that evening, look what happened. Big spins more. Big sell-offs coming into the Asian session. Asian session started at 2,000 and ended at 2,300, which is interesting because that's where it went down and broke below that 4-hour. Closed below it, that yellow candle here. And what happened next here? Wow. Bullish pin bar. Nice. Bullish pin bar at the bottom of a trend. Much confidence. Be looking for a trade. Took that trade after next candle broke above it. So I added to my opening positions. I had an opening position here, and I added another opening position. Same strike. So 4,500 calls. So the price I paid here was a lot more versus the price I paid down here. There's a huge discount. Yeah. Why I didn't trade from here to there? That was my nap time. I'm in the East Coast. That was a bad time for me to get up, but it was the opportunity to look at the phone and see this pattern. Liked it. What happened after that? That happened to be the low of the pre-market session. From there, went up into the London session that opens at 0,200. And when I came back, or when I woke up to go do my morning fitness, I see this huge green candle. I actually woke up before. Yeah, but I saw this huge green candle. Outstanding. I did not close the trade. Shame on me. I wanted to go higher because I'm thinking, okay, if we're above the high of Friday's trading range, which we were, this was the high of Friday, New York session. We were above that. My thought is we're going to gap up in the morning. If we gap up in the morning, we may go higher, faster up here. So that kept me in the trade longer. And what happened? Yeah, 4,500 reverse, went down. Any gains I had up here melted away, went back down. But I felt confident because that huge move, that big price action, again, let's see that on the 1 hour. Here's that 1 hour, huge impulse move. So thinking there's going to be a minor retracement of it. Go back here to 15 minutes. See, there was consolidation. So it was not panic selling, it was consolidation. And the consolidation was hovering around that high of that 4 hour candle. There again, broke below it, just like here. It's consolidation, broke below it, consolidation broke below it. Thinking, okay, that's what they're going to do. The market's going to dump pre-market before the New York Open. And it did that. Came down, retested this consolidation, did not even do 100% retest. Nope, didn't even test 100% of this bottom, which was, again, that low of the Asian session. What it is, when a consolidation here, saw these big wicks, bodies, small, think, okay, that's it. That was a dump. Should I load up some more? No, I did not. In hindsight, yeah, if I bought more call options, same strike, 4,500, I would have got in around the same price that I bought here. Maybe a little bit higher, maybe a little bit lower. Well, I was confident that, again, it was going to go up. And it did. Ran up. Come here into the New York Open. Again, there's the 8 a.m. banks open, the currency markets, and then the regular trading hours for the New York equity market, 9:30. That's what it did. It reversed, took off like a rocket ship, broke above that horizontal line, and where did it go? Back up to 4,500. Premium shot up really fast. Yep. But again, I'm dealing with options that decay, expire the same day. So the value that was here did not reach the same here. No, because it was time decay. You understand options, time decay. They expire 0 DTE. So went there, popped up here, closed all my positions. Yep. So this one, you can see I got in here, but I closed here. So if I had the futures contract, I would have had a profit because, again, this was higher than there. The options I bought here, that strike, again, I paid for that price, a higher premium. When it got up there, I had lower premiums. That one I lost small. And then this one I bought did well. All my profits I made on this one covered the small loss in that. Yep. Yep. So now if you see here, this 4,500 is being rejected. It's tested several times, like down here. This swing low was tested several times. Buying opportunity, and here, this opportunity, this bearish pin bar, where I closed at bearish pin bar. In hindsight, I should have also did the reverse. Did the put options, put options, very simple, to the bear call spreads for credit ones with strikes above that. In hindsight, yep. Again, it worked out fine. At the end of the day, I'm green. Even though I took a loss on my first trade, I'm still green. It's a beautiful thing. And let's take this to the option chain. Open it up. There's the ES. August, the ones that expired today. 4,500 strike right here on the call side. 4,500 strike there. Yep, much difference. So the first ones I bought was 8.00, and now it's 2.45. Yeah, much lower. And then the second ones I bought was 340, and now it's 240. Again, price bounce, much lower. Again, thank goodness I closed because the premiums felt away. This too. Here on the weekly, I know it's just Monday, but just to show you, inside candle currently, we haven't taken out the higher low of the prior week. But we see what's happening here on the daily candles. We broke out the high of Friday. The momentum's to the upside. This candle will close at 5 p.m. to help determine what's my next trade setup, what I'm looking to do. So I'm just saying, see this big candle here? I mean, this big wick here? I think we might have a retest of that. I have to look further. But looking at this now, here's the high, here's the low. Big wick. That big wick inside there. Let's take here, 45.50. Taking this to the 4-hour. Big wick there. Maybe not occur today. Maybe later this week. Might get up here and retest these areas. These areas had panic selling. So a retest up there, I might be looking for a bearish entry for panic selling, as well as riding the trend up. That would be determined going forward the rest of this week.